On the behalf of the committee on MSME and startup, I welcome our today's speaker CA Anshu Singhal and our coordinator CA Juhi Goyal ji. So I request CA Juhi Goyal ji, please give a welcome note to our speaker and introduction of him.
Thank
Over
you.
to you.
Thank you so much, sir. First of all, very good afternoon to everyone. Thank you for the opportunity. It's my privilege to introduce our esteemed speaker for today's webinar, Mr. C.A. Anshulji, a seasoned expert with 20 years experience in corporate tax, transfer pricing, and foreign direct investment. He has worked extensively with multinational clients, helping them navigate their tax planning, compliance, and litigation. As a co-founder of Startup Bazaar and Invest Catalyst Angel Network, CA Anshul Kumar brings a wealth of knowledge in startup ecosystem and investment strategies. His experience in advising clients across industries, including telecommunications, IT, manufacturing, and healthcare, makes him uniquely positioned to guide attendees through the complexities of Section 80 IAC exemptions. We look forward to your participation in this insightful session, sir.
Thank you, Juiji. Thank you for a nice introduction. And I thank the committee on MSME and startup for organizing this Pathshala series, which is very, very beneficial for the CA community and fellow professionals. And I have seen the topics which have been taken in the past, and they are really amazing. And today also we are going to discuss the 80 IAC exemption and also certain other things related to this particular exemption, that how it works, what are the pitfalls, what needs to be taken care of, and also along with the interministerial board approval, which is the prerequisite for obtaining or availing this particular exemption. There come certain other benefits under the Income Tax Act. So we'll also discuss few of those. So should we start the presentation? Okay,
Yes, sir.
let me just share it. Is it visible?
Yes, sir, it's visible.
Okay, great. So basically, what is our today's agenda? We will be looking at what is the background of Startup India program, just to give a brief background, how it started, where it went, and where we are today. Then we will look at the definition of startup, because this is the first and foremost thing which needs to be looked upon while we are applying for a startup registration. Because until and unless we qualify as a startup, there is the income tax exemption or the first stage registration will not be granted. Then we'll go on to look at what is the 100% income tax holiday as is provided under 80 IAC. Basically, it is a deduction. How it works, what are the conditions attached to this claim. Then we'll also look at certain other exemptions which come along with this particular interministerial board approval, right? So we'll go one by one. Now, coming to the background of Startup India program, it all started in year 2015. Just after a few months of the Modi government taking over, they thought that just by providing government jobs, it's not going to serve the purposes of the economy and the demographics which India has. So they rolled out the Startup India program, wherein the aim was to build a stronger ecosystem to nurture innovation. So what was the thought behind this particular definition was that a lot of new things, lot of new innovations were coming into India. They were hitting the Indian markets. But what the government felt is that the innovations which are designed for the foreign markets or for foreign utilities may not perfectly fit into the Indian market, or may not be useful to the Indian public. So therefore, in order to derive a, what we should say, derive a culture of innovation within the Indian people, within the Indian ecosystem, they thought that they should encourage the setting up of new age startups so that innovation can be brought in into the systems very strongly. Then they also thought that one other aim of Startup India program was to drive sustainable growth and to generate large scale employment. Now, large scale employment was something which was added later on, because in the initial definition of the startups, large scale employment was not considered. And however, they felt that because this is one of the key important criterias wherein the private sector has to pitch in, this was also added into the program. The government came up with a formal Startup India program in February 2016. Now, in February, say for example, they almost took 10 to 12 months to formally draft a plan wherein they had given a roadmap as to where we want to see India in the startup ecosystem space, how we want to nurture these startups. They clearly wrote down that what kind of exemptions, what kind of support is required, and how they are going to provide that all those supports to the startups. And if you would see, I've given a link to this plan, which was launched in 2016, almost 8.5 years back. You would see that most of the things which were planned at that point of time have been rolled out, and they are in place as of now. Under this plan, recognized startup entity can avail not only tax and regulatory incentive, but also avail favorable financing from government, ease in patent registration, and other benefits. So we are not going to talk about other benefits and funding requirements or funding opportunities which are available today. We are going to focus on the income tax exemption which is available. Now let's come on to the definition of startup as is defined in the Startup India program. So first of all, we have to understand now why it is important for us as chartered accountants to understand this, because most of the times whenever a client is building a new business or running a new startup, they come to a chartered accountant for first incorporation of that startup, and also then to seek our assistance in what kind of benefits are available to them or not, and how they can use the registration of as a startup to grow their businesses. So first of all, we need to understand that whether a particular business is going to qualify as a startup or not, right? Therefore, understanding the definition of startup is very important, and every new traditional businesses many a times opening a shop in a Kirana shop may not be considered as a startup. So therefore, DPIIT has given a defined criteria of as to what new business would be classified as a startup and when it will be eligible for a particular registration, and then the consequent benefits. The eligibility criteria has many facets to it. It includes turnover, it includes business activities, it also includes the type of business entity which has been set up. So not a proprietorship concern may not be available eligible for claiming any income tax benefit, or even be considered as eligible for getting a registration under the Startup India program. So we need to be considerate about those things. Then the time period from the incorporation date, that for what time period an entity will be considered as a startup, then the how it has been set up, those all those criteria we will discuss one by one. All these things need to be very carefully considered while advising the clients as to whether they will be able to get themselves registered or not. Then startup status is not automatic. This needs to be applied for, right? So we are chartered accountants, probably we are aware that it needs to be applied for, but we need to guide the business person also that it's not automatic, because many a times I have seen some clients coming and saying that I am a startup. Now, in a layman term, saying that I am a startup may be good, but until and unless you have got the registration certificate in your hand, probably you will not be eligible to any kind of benefits which a startup can get. See, like, there are many other benefits in the government tenders. There are many private companies also which are looking towards innovations. They are hiring new startup companies to assist them in developing their own new processes, right? They are working together for developing new products. So in those circumstances also, we have seen these private organizations are looking for the registration certificates and not just going by your business activities. So therefore, this is something which is important for us to know and to guide also. And we have to tell them that only after the registration with DPIIT, you can call yourself as a registered startup or as a startup, to say so. Now, what does a startup entity mean? So, a startup entity means an entity which is incorporated or registered in India. So, first of all, the Startup India program is for Indian entities. It's not open for the foreign entities. That's for sure. What kind of other criteria do we have? Period. So, period is up to a period of 10 years from the date of incorporation. So, only an entity which is not more than 10 years old from the date of its incorporation will be considered as a startup. And also keep in mind that it's not necessary that you have to apply for a startup registration immediately after incorporation. You can run your business, wait for some time for it to grow, see that how it is doing, because many times we have seen startup gets registered, it may or may not do well, and then they close the shop and go out of the business. So there is no point getting a startup registration and spending time and effort and cost onto such kind of registrations until and unless you're sure that yes, I'm here for a longer run. So even if you apply in the 9th year of your existence, you can still claim the benefit for the 10th year, right? So that is how it works. But after 10th year, once your 10-year period is over, then you will not be considered as a startup. Then what is the entity form? As I mentioned, that proprietorship concern is not eligible for getting registered as a startup. The only entity forms is private limited company, not even a public limited company. A private limited company, a partnership firm, which has to be a registered partnership firm, or a limited liability partnership, right? So only these three entity forms are eligible to get themselves registered as startup. Now, when we will go to 80 IAC exemption under the Income Tax Act, the partnership firm also gets excluded. So only private limited company or a limited liability partnership firm is eligible for getting registration under 80 IAC benefit, which is the interministerial board. So this is the first stage registration, which is by the DPIIT. Under the DPIIT, a registered partnership firm is also eligible, but under 80 IAC, registered partnership firm is not eligible. So when a business person comes to us and asks that what is the entity form which I should set up, then the partnership firm is the most easiest form of entity which can be set up to start the business, right? Now we need to understand from them and we need to guide them that if you are in a longer period of time looking to avail 80 IAC kind of benefits, then it is good to go for a private limited company or an LP from the initial stage itself, because converting a partnership firm into an LLP or a private limited company will come with costs and will come with tax implications also at a later point of time when the business has already grown. So therefore, if the longer term objective is to go for these kind of registration and these kind of benefits, then it's good to get the company or a LLP incorporated from the day one. Okay. Then we have got the turnover criteria. The turnover criteria says that the annual turnover of the company or the startup entity should not exceed 100 crore rupees in a financial year. And if the 100 crore turnover is breached even in 1 year, then from that year onwards, you will not be considered as a startup. However, the period before that, if you had already got the registration certificate, the startup registration in place, then for those periods you will still continue to be considered as startup, but not for the future period. So we have to be mindful that turnover criteria, whenever we are exceeding, we are reaching that threshold, we are aware that when it's going to be breached. And also we have seen that in goods kind of business, in businesses which are dealing with trading of goods or with manufacturing of goods, generally the turnover rises very sharply. Whereas in the services business, wherein you are rendering services or software business, the turnover doesn't rise as sharply as we have seen in the goods kind of business. So therefore, we need to be aware that when is the threshold going to exceed or not going to exceed 100 crore rupees. Then is the activity criteria. This is one of the most important criteria, that what is the business activity which the new startup entity is carrying on, so as to ensure that when we are going for the startup registration, we have to explain and elaborate that what kind of activities we are performing and where we are fitting in any of these criteria. So for example, the first thing says innovation, development or improvement of services, products or processes. So this is the first criteria. And as I mentioned that in the original definition, the first and the second limb was there, but without the employment generation or wealth creation. So this was added later on. So we'll first understand what is innovation, development or improvement of services, products or processes. So innovation, we all know that something new has to come into picture. There is some, say for example, a patent which has been registered, or there is a new innovation in medical or pharma sector. There is a new invention in some engineering products, or there is any kind of new thing which was not in existence before, but you have brought it into existence now. That is called innovation. Whereas development or improvement of services or products is improvement into the existing products. So for example, I'll give you one example. Say a company used to run a truck business, used to run trucks and was into logistic business. Now this is a traditional business. You are transporting goods from one place to the another place. Now what happens is that there is an application, a software application which is developed, and there are certain new devices which have been fitted into these transport vehicles, which can track the movement of the vehicle, also which can analyze the efficiency of the fuel consumption, or how the where when and where the vehicle is going to require maintenance services. All those information, if are available on an app, and you have improvised upon that process wherein you can better manage the fleet movement and improve upon the efficiencies into your fleet, then that will be considered as deployment or improvement of an existing process. Or if there is a new if there is an existing product, say for example a hardware, a laptop, and you have done certain things to that particular hardware which improves the efficiency of the product, then it will also be considered as improvement of services or products. Therefore, many a times we see, and we have uh, uh, not we, the business entrepreneurs have a embargo in their mind that I have not invented something, I have not done something which is innovative, I'm just doing some already existing thing in a new way, right? Or many times we have seen that they are not doing something in a new way, but it is some new kind of process or some new business which has been brought into India, which is actually able to generate employment or generate wealth. It's or, so it's not and, wealth or employment generation. So one of our client was into gaming business, but they were not developing games on their own account. They were developing, writing codes for somebody else, and they were into writing codes for casino games for overseas companies. So they were just looking for certain basic accounting and tax filing services. And when we looked at their business, they had done very good in the initial year itself, and we asked about whether you have got yourself registered as a startup or not, and they were saying that we are not doing anything innovative, we are just creating the designs, writing the codes, we are hiring mathematicians and statisticians, so there is nothing new which we are doing into the market, and it's just that we are doing traditional business, but we are doing it for somebody else. And when we looked at the industry portfolio, I'm talking about 2018-19 period, when the fantasy games business had not uh, become very popular at that point of time, before COVID times. So we looked at the business, we looked at the industry, and we found out that the gaming industry worldwide is a very big industry, and the casino games, online casino games are also existent, And there are not many players in India who are writing codes and developing these kind of games for overseas companies. And we looked at the foreign exchange revenue earnings for them in the past 1 year, and we found out that they are doing pretty well. They had also created a niche kind of employment for mathematicians, statisticians, and graphic designers whom they put together as a team, and they were building the new processes. So therefore, we applied for their startup registration. They got the startup registration, and in 2019 they got the ATIAC registration as well. And at that point of time, only hardly 200 or 250 startups were registered as uh, eligible for ATIAC. So we need to look at how we need to present the story of a startup, and we need to find out within the business activities whether something can be classified as improvement of process or improvement of product or not. So that is very, very important, right? And we as professionals, the guidance will be sought from us only. Then the last but not the least, splitting up of business. We have seen this particular condition in many other sections, wherein it says that you cannot just bring in your plant and machinery or bring in old business into a new entity setup, and say that now this is a new entity and we have to get the startup registration. So what generally is the criteria? If you are an owner, business owner, who are already doing this particular business in another entity, you just move all those contracts into a new entity, you move all the plant and machinery from the older business into the new business entity, then the government is not going to consider that as a new startup, and they are going to consider it as a splitting up or reconstruction of a business which is already in existence. And therefore, in those particular circumstances, the startup registration will not be eligible to be granted. And we have seen that nowadays in our discussion with the Indian government, we have seen in the DPIIT, in fact, they are very particular about finding out whether there is a splitting up of business or not, and they have hired people who are good at looking at various kind of desktop research. We are doing desktop research and finding out people who are directors of the new company, finding out their backgrounds, where they were working, whether they are owning another other businesses, uh, extracting data from MCA websites. And there are questions which are being asked in the DPIIT registration process, that why should we not consider your company as splitting up of the existing business if they find something. So this particular condition is not that stringent when they are granting the first stage registration, the DPIIT registration. But when we go up to the next stage, that is the ATIAC registration, this particular condition is looked upon very stringently. And also what they are intelligently doing right now is that they are mentioning in the certificate and in the emails which are sent along with granting of the certificate, that these conditions are on the basis of your self declaration, but at a later point of time when the income tax authorities are granting you the exemption, if they found out that something was not declared properly, then the income tax authorities or the other authorities, whosoever you are going for benefits, they can deny the benefit on the basis of these particular facts. So it's not per se final that just holding an IMB certificate is going to be enough. You have to prove all these criteria as and when there will be some income tax scrutiny or inquiry, right? So we have to be mindful of these particular things. Now, all these criteria are mentioned in this particular notification of 19th February 2019. I have given a link. I'll share this presentation with all of you through committee, and you can just click on this link and it will give you the entire notification. Any queries as of now, I will be happy to answer. Juhi, just can you
Yes, sir.
see?
There is some few queries. I am sharing with Julie ma'am. She will ask you.
Sure.
Sir, as we were going through the session, I do have my personal question. In the
Yeah.
beginning, you told us that there are certain criteria that DPIIT has to follow for the recognition of any business to a startup. Are we also going to discuss those criterias?
Yeah, this is the startup registration process. Now we are going to discuss how the registration process happens, what are the conditions, what are the documents which we need to be aware of in the first stage registration as well as in the second stage registration, where it is to be applied. All we are going to discuss.
Okay. Okay, sir. So I have received the number of questions.
Mhm.
The first question I'm having is what is the quantum of exemption that can be availed by any startup?
Quantum of exemption. So we'll discuss this in the coming slides. After we have discussed the startup registration process, we'll discuss what is the exact exemption which is available under AT-IAC.
Okay.
So I'll request to wait for till that moment when we will come to that point.
Okay, so a very general question is there, which type of DSC is required for startup registration?
Now it is third class, class 3, and with PAN incorporation, PAN encrypted, PAN of the company, of the entity. It's not just for the individual, but it has to be linked with the entity which you are obtaining the registration for.
Okay.
So it is class 3 DSC with PAN encryption of the company also, and there is some declaration which needs to be signed in the letterhead of the company also nowadays, which you need to send to the DSC DSC provider, and then you need to get that certificate. The normal DSC is not going to work now.
Okay. Okay, sir. So next question is, what is the turnover limit for startups? I guess it's if any entity crosses 100 crores, then
100, if it crosses 100 crore, then going forward you will not be considered as startup.
startup. Before that, we are
Before that,
considered.
yes.
Okay. So other questions are related with the conditions and rules. I guess those are going to be get covered.
Yeah. So conditions for the startup registration, we have already discussed that what is a startup, what is the definition of a startup, which we have already discussed. Now we'll come on to the process, that how the process flows and where and how we need to apply.
Okay. It would be very grateful if you give a brief on the conditions.
Yeah, we'll give. So conditions, as I mentioned, that first and foremost conditions are these ones only. These are the criterias.
Okay.
Right. So these are the criterias which are there, which you need to fulfill. And there are certain other conditions which I'll share with you when I come to the each section.
Okay.
So each section has its own conditions.
Okay.
Right.
Okay, so these were the questions.
Okay.
Yeah, we can continue with the webinar.
Thank you. So
Thank
now
you.
we'll move on to the startup registration process. So as I mentioned that there are two stages of startup registration. One is the registration which we call the first stage registration with DPIIT, which is Department for Promotion of Internal Industry and Trade, something like that. Very long. I generally keep skipping the full form of it. But DPIIT is the nodal agency which is authorized to process all the applications for startup registration, and this registration process was particularly beneficial for claiming exemption from the angel taxation, which used to be there till this recent budget was announced. Till that time, if you would recall that if share capital was issued at premium, the excess premium which was received over and above the fair market value was considered as income in the hands of the company. Now, this was called the tax on this particular premium was called angel taxation in layman terms. So this first stage registration was a gateway for you to claim an exemption against that tax. You just needed to file one declaration which would give you exemption. Apart from that angel taxation, there are many other benefits which you can go for with this particular registration. Say, for example, you will get a lot of exemptions while applying for government tenders or PSU tenders. There will be certain clauses for startups, certain relaxations for startups. Let's say, for example, relaxation in earnest money deposit, relaxation in previous experience, relaxation in, say, for example, your share capital requirements, right? So all those things are available in the tender documents. And many times we have seen that even if there are no such criteria mentioned in the tender documents, you can actually approach the authority issuing the tenders and you can ask that why you have not incorporated any kind of exemption for startups. And we have seen that the tender documents have been revised just to incorporate certain exemptions for startups. So in most of the PSUs or GEM tenders in GEM portal also there are many relaxations for the startups. So all those benefits come along with this particular first stage registration. Also, you get eligible to apply for the seed fund scheme and to apply for the SIDBI fund of funds scheme. So all those things come along with this first stage registration. And then subsequently, once you are recognized as startup by DPIIT, later on you can apply for the second stage registration, which is granted by the interministerial board, right? So interministerial board is a board of secretaries of certain ministries which look into the application and they go deeper into the details. And once they are satisfied, the second stage registration is granted. And only after availing the second stage registration, you will be eligible to get the exemption under 80 IAC, 100% tax holiday, which we say. So prior to that, just with the first stage registration, it's not going to be possible. So as on date, means this is the today morning's statistics which are available on Startup India website. It says that 1,50,000 startups, if you would see this number, these are the startups which have been recognized till date by DPIIT. And with this particular number, the Indian government and in the world, we are recognized as the third largest ecosystem of startups. There are so many other things which have helped us to grow into that number. Then you would see that out of these 150,000 startups which have been granted registration for the first stage, only 3,600 startups have been granted the income tax exemption till date after almost 8.5 years of launch of the formal Startup India program in February 2016. You would see that the ratio of income tax exemption is just somewhere around 2.25%. And if you would also see that out of these 3,604 registrations, almost 2,500 have been granted in just past 2 years. So earlier than that, means say for example in first 7 years almost, the number of startups which got the second stage registration was hardly 800 or 900, right? So this is where the government is also not happy about the situation. And in fact, Invest India, a DPIIT, they have tried to make the process more simpler, but because it involves many ministries, there are secretaries involved, there are bureaucracy involved, and it goes with at least 2 to 3 stages of review process. The first, there are the applications received for this particular exemption is very low as on date, because people are not much aware as to how to apply and what are the conditions or what are the criteria to apply for this. They believe, many times we have seen that they believe that the first stage registration itself gives them the 100% 80 IAC benefit. So that is also a lack of awareness, because when we were discussing earlier this year in January or February with one of the government officials, they said that hardly 10,000 or 12,000 applications have been received in the entire duration of the Startup India program for availing the 80 IAC benefit. So they say that from 10,000 or 15,000 applications, if we have granted 2,000, 2,500 at that point of time, it was that number, so 2,900 I think. So they felt that it is a very good number. So the success ratio is good. But if you would see from the overall startup registration number, then we have to see that it's very low. So therefore, the process of applying for this particular registration is also very, very important to be understood. Now let's understand that what is the requirement for applying while we are applying for the first stage registration. Now somebody asked that what is the DSC requirement. So that is one of the important changes which has happened in past 6 months, that now you need to go to NSWS, which is National Single Window Scheme .gov.in. This is the website where you will have to get the registration done and then apply for TPIIT registration first stage. Earlier, this used to be done through startupindia.gov.in. Now that process has moved to nsws.gov.in. Now what happens is that many people get their ID registered on Startup India website. Now once that ID has been registered on Startup India website, that cannot be registered on NSWS website. So therefore, whatever email ID or phone number you are going to get yourself registered on NSWS, please create your login ID first on NSWS, and then that ID itself will work on Startup India website also. So don't register first on Startup India website. Register first at NSWS. Now, once you have registered yourself, then you will be asked for. You'll have to find there is new project which you have to add. Once the project will be DPIIT registration. Once that project has been added, then you click on that, and you'll be then presented with the form which has to be filled in. Now, what you need to be filled in, these are the information which are required. They will ask you that what is your project stage. Project means your business is at what stage, whether it is in ideation stage, whether you have already created a prototype and you are into validation phase, or you are into early traction phase, means you have already launched it into the market and you have already seen some inflow of customers, or it is already a tried and tested product or service which you are rendering and you are now into scaling up of that particular business. So you need to it may or may not be very, very particular or precise, but you need to see that which best fits in for your particular stage of business. Then you have to mention what is the industry, service sector, project pertains. There is a drop down list. There is a long drop down list which you can select your business from. Then the number of employees which are being currently employed in your company, in your entity. Then you'll have to create a brief write-up about all these points, a brief of your project or business, what is the problem. In fact, these are the questions which are asked on the form, right? So you'll have to answer each of them, and please be mindful that 400 characters are allowed, not 400 words. 400 characters means if a word is constituting four letters, I would say, then that letter will be counted as a character. Even spaces are counted as one of the character. Even full stop, comma is counted as character. So you have to be very brief about what you are writing and be crisp as possible, because in shorter version you have to convey the message about your business. So you have to mention what is the problem which you are serving, or the product which you are what is the problem which you are serving, basically what is the problem you are trying to solve. So in startup ecosystem, everything revolves around a problem, because what you say is that any business solution is something driven to solve a particular problem. Somebody is facing some problem which a business is trying to resolve. Say for example, Blinkit, or these kind of, I'm just taking names for example purposes, what these kind of business is trying to do, that somebody is facing a problem that they need products at a very quick pace. So for example, they have ordered it and they need it at within 10 to 15 minutes. That is a problem statement. Now how they are solving it, that they have created warehouses, they have created their logistics chain, they have created a big force of delivery partners which they are using to deliver the required products to your doorstep within 10 minutes. So that is how you need to describe your problem which you are solving and how you are solving it. So what is the problem is one statement, one answer. How you are solving it is another question answer. Then what is the uniqueness of your product? Whether there is any uniqueness. Now you have to find out some uniqueness and or tell something about it. Then the very important question is how you are going to generate revenue. So ultimately, startup is a business. It's not a charity. So you have to generate revenues. Now, how you are going to generate revenues? What are the sources of revenues? There will be some primary revenues. There will be some byproducts or some other secondary sources of revenue also. So you can mention all of them, but be mindful that only 400 characters are allowed to you, right? So what you can do, you can write whatever you have to write and use Chat GPT to shorten it, to make it crisp without changing the meaning of whatever you are trying to say, right? Then details of any award recognition, if you have already got some award recognition, you can mention them with proof. Either you can click some photographs, upload them. There are options available to upload the photographs, or you, if that's something, there is some news or some website, third party website which has described your achievement, you can give links of those websites. Then you have to mention how you are funding your business as of now, whether it is the shareholders capital, whether you have taken some loan, or whether you have raised funds from someone. All those details need to be mentioned. Your details of directors and partners profile and role of team members. In brief, you can mention that what is the role of each directors or each of the shareholders. Then details of your website, you need to mention. It's very, very important and actually mandatory to give your website. Even logo is required now. Logo, you have to upload the logo of your business. So logo, creation of a logo is also very important, because without uploading the logo, it won't allow you to move forward. Then the copy of incorporation certificate or registration certificate. Nowadays, if you are a company or an LLP, it goes and checks the authenticity and the number and the name from the MCA website. So if there is any mismatch, they will not allow you to move forward. So be careful while entering your registration number and the name of the entity, that has to match with the records at MCA website, because it's an internal process. So if there is any mismatch, uh, it will not allow you to move forward. Even the date of birth of directors will be asked for, and the Aadhaar numbers or the DIN number of the directors will be asked for, which will then be verified from back in their internal background process, which will be verified through the MCA portal. And once that is validated, only then it will allow you to move forward. Now, declarations which you have to give, these are very important declaration which we must understand, that I certify that the company has not been incorporated for more than 10 years. This is the first condition which we just learnt about, is the period criteria. Then the turnover criteria, the turnover of entity in any of the financial years since incorporation has not exceeded 100 crore rupees. Then it's working towards innovation development. You have already seen one of the questions, that what is the uniqueness of your business, how you are generating revenue. So they will get to know about the um, uniqueness or any of these. And they also now want you to declare formally that yes, there will be check boxes along with all these declarations. There will be check boxes, you have to check them up, and then down below there will be, yes, I certify that all of the above is true. And I certify that a startup has not been formed by splitting up. All these things are the conditions which I just mentioned earlier. You are certifying all these things, right? Then I certify the company is not formed due to compromise. These are the mergers or demerger kind of process. So you should not be formed through those procedures. Then there are these declarations also, that I certify that entity is neither incorporated, registered as subsidiary of any Indian or foreign entity. So what the Startup India program says is that they are giving incentives to individuals. They are not giving incentives to corporate founders. So you cannot be a subsidiary of an existing company, or you cannot be a holding company also of an Indian company or a foreign company. So foreign shareholding is not at all allowed, even from an individual. The FDI, if your company is having FDI of more than 50%, that is not allowed. You have to declare that last declaration. Shareholding by Indian promoters is in the startup is at least 51% as per the Companies Act and SEBI ICDR regulations. So you have to be careful that if it is a subsidiary of a company, then you're gone. You're not eligible. Also, if there is an NRI partner or NRI shareholder which you have inducted into the company, and if that NRI's shareholding is more than 51%, then also you are not, more than 49% actually. Basically, the Indian shareholding has to be more than 51%. So, on the contrary, the shareholding of the NRI person should not be more than 41%, 49%. So, that is also you need to be careful about. Then I certify that it is not formed by joint venture. Please note that any startup entering into any joint venture after obtaining recognition will be de-recognized. Similarly, if at the point of registration you were not a holding company, you are not a subsidiary company, but later on you become a subsidiary company of either any Indian company while you are raising funds, and in that process you become a subsidiary of an Indian or a foreign entity, then also you become diseligible. You get disentitled from the all the startup benefits, right? However, as on date, although these declaration are mentioned, once you get the startup registration, as on date, there is no provision to report that you have breached any of the conditions at a later point of time on the Startup India website or on NSWS. And till the time there is no, not somebody is not finding it out, we have seen that the benefits are still available. But you need to be careful about these declarations which you are giving, because you would see that on the first stage registration process, as on date, it has become very, very fast. It has become almost supersonic. Once you apply, the registration certificate is generally granted within a few hours, when earlier this process used to take few months. So they have gone down from few months to a week or two in last 1.5 years. That was brought down to 5 days or 7 days, and now from last almost 1 year, the process has been very, very smooth. It almost takes just few hours for you to receive a startup registration certificate. And in that particular mail, it is very clearly mentioned that we have granted the certification on the basis of your declarations, and if at a later point of time any of that is found to be incorrect, the startup registration can be withdrawn. Now, other declarations are certify that entity has not incorporated additional entities having similar address, uh, product line, services, and at least one common director. Now, one may argue that we can have two or more startups within the same line, but as on date, DPIIT doesn't wish to have that, and they are asking you to declare that you are not incorporating other entities, or you are not one of the common director, you are not having common directors with similar kind of interests in another entity. I certify that entity does not operate in domains specifically prohibited by law. So that is something which needs to be taken care of. Say, for example, gambling. Gambling is not uh, a business activity which is permitted as per the Indian law. And if you are creating a new app which is promoting gambling, so you can't go and say that I am not prohibited by law. So you'll not be considered as eligible for startups registration. I certify neither established as a sole proprietorship. Now, this is a new clause which has been entered, new declaration which has been now been asked for almost past 7-8 months, which is saying that you have to declare that you didn't start the business as a sole proprietorship and then later on convert it into a company or a partnership or an LLP format. So now what happens is that earlier or nowadays also, many business entrepreneurs or young people will think that let me first test the waters under a sole proprietorship. Let me just see that whether the product is getting some traction in the market or not. And then once I am sure about the business idea and its reception in the market, at that point of time, I'll create a company or an LLP, and then I'll move the business into that particular entity format. Now, in those circumstances, generally there is no track as to how the sole proprietorship has been converted, because there is no formal mechanism of converting a sole proprietorship into a company. However, they are now asking you to declare and certify that you had not created that business as sole proprietorship. So this is something which is new and which is detrimental also. And we have made some representation that some relaxation should be brought into this particular criteria, because most of the entrepreneurs will first start as sole proprietorship and then only move on to onto the company format, because getting a company incorporated is very easy, but to wind it up, say for example, in case the business uh, doesn't run as per the expectation, it's very difficult to get the company dismantled. So this is something which is important. Then I certify entity having common director, designated partner, or partner with any and other entity fulfills the provisions of Companies Act. I certify entity having common director, partner with any other entity fulfills the provisions of, and I certify the entity shall not undertake any related party transactions with common entities except transactions at arm's length basis. So this is one of the very basic criteria, that once you have got the startup registration, which will be eligible for various benefits, so you can't enter into transactions with your related parties which are not at arm's length price. So this is a provision which is already there in Companies Act also, and if it is foreign entity, the transfer pricing regulations will also apply. Right. So this is something which you have to declare. And once you have declared, as I mentioned, that as on date, the first stage registrations is very fast. You will receive such kind of a format, and they're mentioning, if you would see apparel industry sector as self-certified by them, and they are now amending this particular language also. Certificate shall all only be valid for entity up to 10 years from the date of an incorporation, only if its turnover for any of the financial year has not exceeded 100 crore rupees. So valid up to date is also mentioned. This is there is this startup registration basically number which is allotted and which you have to quote in all your communications, or whenever you are going for tenders or applying for any other benefit. This is the number which you have to quote. Okay. So I think this first stage registration process is clear. If you have any questions, Juhi ji, if you can just see if there is any question till now on this particular registration process. You're on mute, Juhi, please.
Regarding the registration process, as one of the participant has asked, is there any other condition also apart from the DPIIT criteria?
No, there are not.
Okay.
So as I mentioned that whatever conditions the declarations are actually the conditions.
Okay.
All the conditions have been put into declaration format.
Okay. As one more question I do have, it's regarding a case study. As the participant has the partnership firm registered under startup, but as per the criteria, firm is not eligible to take 80 IAC exemption. Then what alternate can be adopted now to claim exemption?
You have to get yourself converted into a private limited company or get converted into a limited liability partnership. But
Okay.
that entity will change. So probably you have to apply for another, means again for the DPIT registration, because it is given to the partnership firm. Now the entity will change. You'll have to apply for it again, because once the entity changes, so for example, for income tax purposes, there will be some tax exemptions available if you meet those conditions. But for startup registration process, there is no clarity in the regulations as on date that whether the registration granted to an earlier entity will continue for the later on entity also. Are you getting me?
Yeah, if we change the form of the entity.
Yes.
Only then this is the only alternate.
Yes, that is the only alternate, and you have to get the new registration for the new entity. And then there will be question that whether it is split up of another business or not, and that you can say that the earlier business is also recognized, and therefore the now what will happen is that the company will get incorporated from now on. Say for example, the partnership is in existence for the last 4 years, right? But the company get incorporated now, because if partnership gets converted into a company, the date of incorporation of the company will be today. Now the question will arise that from when we need to count the 10 years.
Yeah.
So that is a challenge as on date, because that is something which is not provided for in the registration process, that you can mention that I was a company, I was a private partnership firm earlier, and now I am moving, I have converted that into a private limited company. So the date of incorporation of the date of setup of the partnership firm should be considered as the date of incorporation. So as on date, there is no such provision on the website, and therefore you can go for the registration, but it will be eligible. It will be available only when you convert the entity form.
Okay. Okay. So, what is the difference between DPIIT and DIPP?
No difference.
Okay.
The same entities. The name was changed later on. So earlier it used to be called DIPP, but then later on now it is called DPIIT.
Okay. Okay, sir. So only these questions were there.
Okay. Okay, now so we move on to the second stage registration, which is the registration which makes you eligible for availing the 80 IAC benefit and some other aligned benefits. Now the first stage registration has moved to national single window, but the second stage registration is still has to be applied on startupindia.gov.in. So as I mentioned that that login ID will work on the Startup India website also. Now, what are the critical points? Only the entities incorporated as companies or LLPs are eligible. As this question was also raised, that registered partnership firm is not eligible for 80 IAC benefit, and that's why I mentioned that we have to be careful while advising the client that at the first stage itself, we have to advise that if you are going to look for 80 IAC benefit at a later point of time, then get the right form of entity incorporated from day one. Then the entity should have been incorporated on or after 1st of April 2016, but before 1st of April 2025. Now this 25 was earlier 21, 22, 23. Each year they just keep on rolling it for 1 year. And I don't know why they don't just keep it give it a go for 4 or 5 years at one go. They will keep on moving for 1 year. So as on date this date was changed in February 24 budget. Also, if you would see that uh, in first stage registration, this first condition is not there. This first condition, which is 1st of April 2016. So as on dates, when we are sitting in 2024, you can be incorporated in, say for example, 2015, and still be eligible to claim registration, first stage registration, because 10 years have still not expired, right? So even for 1 year, even if there is 1 year remaining, you can still apply for that startup registration. But for going for the second stage registration, this is written in the law that you have to be incorporated after 1st of April 2016 only. And as per current operating standard procedure, generally it takes 4 to 6 months time once the application is filed and the internal review and final meeting of the board. Because as I mentioned that it is interministerial board consisting of certain secretaries of the ministries, it's difficult for them to assemble for meetings and to scrutinize the applications. And obviously they do not scrutinize it afresh. The first stage screening always is done by the DPIIT team only. They will put up some their own points and their own recommendations, that what are the findings from their own detailed process of research which they have conducted on each application, and what is the recommendation. And in this particular thing, the interministerial board will also have their own reviews. Generally, the minutes of the meetings are published on Startup India website. You can go and search for the minutes of the meetings, and in each of the minutes, whatever startups were reviewed, they will write few lines, 1 or 2 paragraphs about what were the finding and whether they have been approved or not approved. So you will also find that for the startups which have been rejected, many of them are been rejected only because of the condition of splitting up of business, and because there is some finding, there is some data which is available with the board which says that these particular founders were involved in some certain similar kind of another business also, and they have just moved that business into the new entity, right? So these things are important. uh, then what are the documents or information required? It is mandatory to upload your memorandum of association of LLP deed. Then you have to upload 3 years financial statement is only criteria if you are 3 years old, if the entity is 3 years old. So it's not mandatory. Income tax return also, if available, it's mentioned if available. And if you are not filing the income tax return, so for example, if you were incorporated in January and the time you are applying now, or say for example you are applying in December, then you must have filed one income tax return for January. Then you, at least that financial statement or at least that income tax return you have to upload, right? Then you have to create a pitch deck which has to be very crisp. The criteria which are to be mentioned is, generally what we mention is the information which was asked in the first stage resolution, that what is the problem you are solving, how the product, how your product or service is solving that problem, how you are generating your revenue, what is the profile of the directors and the shareholders, uh, what are the funding which you have raised till date, where you want to move, and also be very careful that you have to some process. If you are into product business, put some photographs of your actual products, or if you are into process, if you are into service business, put some photographs of your actual office space. That is very important to be highlighted. If you are into, say for example, app business, if you are creating an app, so give some screenshots of the app, how it works, give the process of how it works, because until and unless the interministerial board understand that how your business is running, they are not going to appreciate why they should give you an exemption. And be mindful that the government is very careful in giving this exemption, because they are saying that we are giving you 3 years 100% tax holiday, so we just want to give it to everyone. We have to be very careful, because this is again public money. Taxes are public money. If we are foregoing those taxes, it has to be a very good startup which should be doing and which should be fulfilling all the criterias which they are requiring. So a video is also required to be prepared, and this video should not be more than 5 minutes. So 5 minutes is the limit which they mention on their website. Obviously 5-10 seconds here and there would do, but generally again the video has to be very crisp. You should not just be very flamboyant in predicting that, oh, we are just going to change the world. Be as realistic as possible. Obviously some future telling might happen, but don't remain in future only. Give highlights of the actual business, give glimpses of your office space, give glimpses of your product, how your product is uh, serving the people. So last year we were helping one of the companies which was into industrial products. So they were creating an website, an app on a website which was a marketplace for industrial product vendors and companies who are requiring those kind of industrial products. So now this is, in that particular video we gave actually how the registration process for the vendors happens when they are onboarded onto the website, that how it happens. Then how their products are listed. We gave the listing, how the various products which were already listed, and then how the companies can come over and order their products, right? So all that was built into the video itself, but within that time frame of 5 minutes. It also mentioned that why this particular business is required as on date, what is the outlook of shareholders. You have to prepare a script actually, that what you need to tell, how you need to. In fact, we make the shareholder and we make the director to actually read that script generally, but it should not just be a background voice saying something. If a founder or a shareholder director will come and mention about their business, it always makes an impact. Then obviously that how they're making revenues, what is the revenue they have already earned in the past, and what is the future outlook. All these things are mentioned within that script which the person reads out, right? So you have to be you have to give brief about your startup, showcase working out the prototype, market traction which you have already have from your products. And you should, in the script all itself, you should make points or make highlight of the uniqueness of your products or services, how you are going, how your products are useful for the public, or if you are generating wealth or employment at a large scale, that how you are doing that. We were working with one of the companies which is into uh, uh, I would say blue collar jobs. So what they were doing is they had created an app wherein the blue collar people can list themselves, and it was not just listing and giving the manpower supply services. They were actually helping them out in enhancing their skills of working in big multinational corporate houses, in big buildings, how to maintain those spaces, right? So they gave the journey. We made sure that in the video the screenshots of the app is available, wherein the progress report of the persons listed on those on that app is available, and what kind of program. What they mentioned, that we have been able to enhance the salary payouts to these employees by quite a margin. They were able to give a number. We quantified the number, that how many people they have onboarded from the date of their incorporation till the time the application was made, or till the time that video was prepared, how much revenue they have generated through these services, how many people they have employed. So almost they were working with somewhere around 5 to 10,000 people. So that is where you need to give those description and make an impact through that video, because it's going to be a short video which is going to be one of the very key information which is going to be looked upon while uh, approving the application. Then you have to give a note on the product and mention the uniqueness about the business, how the wealth is being generated. Generally, the products at ideation stage are not considered. So what we have seen, that only the products or only the businesses which have been launched into the market and there is some traction around them, only those are considered by IMB, and generally product at only validation or ideation stage are not looked upon very seriously. Then once you go through the process, obviously there can be certain queries which are raised by the interministerial board, and all this process is faceless process. You don't have any access to Startup India officials, or there is no window where you can approach. If there is any query which is to be raised, this will be raised on the Startup India portal only. And bear in mind that the mail is also sent if there is any query, if there is any kind of clarification which is required. So do keep checking your spam mails also, because we have seen many a times the mail from this Startup India website goes onto the spam mail. So what happens is that people generally don't get to know that there is any query which has been raised. And we have also seen that sometimes on the portal also the query is not visible. So what you can do is, if there is no movement even after the filing of application, say for example for 5-6 months, if there is no movement, neither there is any query nor there is any mail which you have received, then probably you can put another query onto that website that we have not received anything, right? Or you can shoot a mail to the support email ID. After everything is done, and if your eligible is selected or approved for being registered under the second stage, this kind of ATIAC certificate will be issued. Now it says that registered as a private limited company, recognized as startup by DPIIT, certificate number is this, certificate interministerial board, and to avail income tax benefits, the startup has declared that it is in this business, right? So I'm just reading what is written here. If such certificate is found to have been obtained without uploading the relevant documentation, it's very small, so I'm just reading it out for you. If such certificate, the last line, if such certificate is found to have been obtained without uploading the relevant documents or on the basis of false information, DPIIT reserves the right to revoke the certificate immediately without any prior notice or reason, right? So that's what I have been saying all along, that merely declaration doesn't mean anything. If at a later point of time, income tax authorities, while granting the AT-IAC benefit, find out that some of the declarations made at the time of obtaining the registration were not correct or false, they can revoke the benefit, and they are not obliged to give you the benefit only on the basis of interministerial board certificate, right? So that is something which we have to be very, very careful. And I'll also mention that what role we as chartered accountant will have to play while we are authorizing this tax benefit. And as I mentioned, we are the people who have to authorize it. And I'll tell you how. So let's, Juhi, do we have any questions on the registration process till now? Then if no, then we'll move on to the benefits.
So we do have few questions, but
You want to take it now, or should we
we
move
can
on?
take that at the end of the session.
Okay, great.
Thank you.
Okay. So now we move on to the eligibility. So we have understood that how the process of registration goes about, what we need to do for obtaining the registration. Now, once we have obtained the registration, how the benefit is going to be available. So as we discussed, the eligible startup entity is only a company, private limited company, or a limited liability partnership. These are the criteria which we have already discussed. Just for refreshment, turnover should not exceed 100 crore rupees. Then you have to be involved in innovation, development, improvement of products, or scalable business model with high potential of employment generation or wealth creation. Then you should have obtained interministerial board of certification, which we have just did in the last slide. And then you should be incorporated between 1st of April 2016 to 2025, should not be formed by splitting up or reconstruction of an existing business. So these are the very basic conditions which we discussed. Now we'll see how the tax exemption moves. It is 100% tax deduction. So although in our layman terms we call it as an exemption, but ultimately it is a deduction of the tax which is payable by the company. So what it means is that if you are in losses, then there is no deduction available. So if you are into profits and your profits are taxable, say for example, your tax liability comes to 10 lakh rupees, then you will get an equivalent amount of deduction from your taxes, which will reduce the tax liability to zero. Then it is allowed for 3 consecutive years out of a period of 10 years from the date of incorporation. So once you have opted for availing the benefit under AT-IAC, then you have to avail it for next 2 years also. So next 2 years means year 1, year 2, year 3. They have to be consecutive. You can't say, okay, in the first year I made profit, I availed it. Say for example, immediately succeeding year, there are losses and you don't want to avail it. So you can't go back. Once you have availed it, it remains available it has to be mandatorily claimed in the next 2 years also. So it has to be a consecutive 3 years. You can't pick and choose. You can decide when to begin. Say, for example, if you obtain the certificate right now, as I mentioned, in one of the companies which got the certificate in 2019, they have not yet started availing the benefit till now because there were COVID times. They have not. There are brought forward losses. There are so many other things, and they believe that the profitability in coming years may be higher. So the timing of initiation of benefit can be decided, but once you have started the availing the benefit, you have to avail it for 3 years consecutively, and it has to be within a block of 10 years. So how the block of 10 years works? Say, for example, the company was set up in financial year 2018-19. So now you have to plot 10 years. One, and it starts. Say, for example, you have, if the company was incorporated in February 2018, February 2019, even then that period of 2 months will be considered as 1 year for income tax purposes. So that completes 1 year. This is one financial year, right? So we have to, it is, although I may remain startup till 2029, right? Because I was incorporated in February 2019. So I may remain startup till February 2029, but the income tax benefit shall be available only till financial year 27-28, because this is the number of years: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is how we have to count the number of years which are eligible for claiming 80 IAC deduction. Now, say for example, if I believe that in these 4-5 years I was not making profits, or even if I was making profit, there are enough brought forward losses, so there is no tax liability, I can start from any of the years. So for example, if I start the start availing the benefit under in financial year 23-24, then this is the first year, this is going to be the second year, this is going to be the third year. So in all these 3 consecutive years, I'll have to avail this benefit. Now, what is the latest year which you can start? You can start from 25-26 to claim the benefit for 3 years. Now, what will happen? So for example, if you started from 26-27, so you lose 1 year, because there is only 2-year block which is remaining now, right? Am I clear? So this is the 2-year block which is remaining now. So if you start availing the benefit in 26-27, only 2 years will be available. So for availing the full 3-year period, you have to start at least from financial year 25-26 in this particular example, right? So this is how it works. This is the mechanism of actually deciding when to apply, when to avail. Then what are the conditions? Once 100% tax rebate is claimed, it has to be claimed for continuous 3 years. The turnover, if, and again, I'm going back. So for example, if you started claiming in financial year 24-25, in 25-26 also you claimed it, but in 26-27 your turnover exceeds 100 crore threshold, then in 26-27 you will not be eligible to claim it, because you are outside the definition of startup now, right? So that is where the turnover criteria comes into picture. So turnover from business should not exceed 100 crores, and it is in one financial year. It's not a cumulative turnover. Business should not be formed by transfer of machinery or plant previously used for any purpose. And this is the condition generally which will be looked upon by the income tax authorities in the first year of your claim. Whenever you claim it, they will look at whether the business, and when will they look? They will go to the year of incorporation, and they'll look at when the company was formed, when the business was formed, whether at that point of time old plant and machinery was brought into the company and used for doing business or not. So that is where we need to have records of the earlier years also. Then, as I mentioned, that chartered accountant has to authorize it. There is a form 10 CCB which needs to be certified by the chartered accountant, wherein the amount of deduction under 80 IAC which is being claimed has to be mentioned, and as a CA, you have to certify that all these conditions are met, right? And this Form 10CCB has to be filed 1 month prior to the due date of filing of return, along with the tax audits. And if you missed filing this 10CCB, your claim of deduction will be denied in 143(1) itself. 143(1) itself will disallow the claim. Now there are certain case laws in 80IA, in 80IB, in earlier law, because 80IAC draws this particular from 80 section 80IA only. So it's not mentioned in 80IAC. They refer that the conditions mentioned in some subsections of 80IA has to be complied with for availing the deduction under 80IAC also, right? So this Form 10CCB comes from that particular section 80IA, 80IB, 80IC. This form consists of all these sections, and at the last it also mentions 80IAC. And there you will see that as a CA, we are certifying that this company has not been formed by splitting up or reconstruction of the business. So as a chartered accountant, when you are certifying this, you have to make sure that you take documentation, you build up that documentation which you can rely upon before certifying this form, right? And as I mentioned, be mindful, this has to be filed 1 month prior to the due date of the filing of tax return. Then the audit report is to be filed 1 month prior to the date of filing the tax return. Then now what we are saying is that 100% tax reduction is allowed under the normal provisions of law. However, till date, the MAT provisions are not withdrawn from the startup entity which is eligible for 80IAC. So even if you are eligible for 80IAC, even if your tax goes down to 0 under the normal provisions of tax, but you are still liable for MAT taxation. So although we are saying it is a 100% tax deduction, but from a cash flow standpoint, you have to pay certain taxes as on date. How the MAT is going to be available as a credit in later years when you fulfill your 3 years criteria, you move on. At that point of time, the MAT which has been paid now will be eligible as MAT credit in the later years. But from a tax cash outflow point of view, you'll have to pay taxes. And also we need to keep in mind as advisors, as tax advisors, that whenever we have got the 80IAC exemption also, please get the advance tax deposited as per the MAT calculations. Because if you are not getting the MAT advance tax deposited, there will be liabilities under 234B and 234C. So the interest liability can be very, very daunting. And as you are all aware that startup founders are always cash crunched. They look forward to saving each and every penny. And once they have to shell out interest liabilities at the time of filing the tax return, it can be very, very painful. And the amount of MAT tax to be deposited at one time at the time of filing the tax return, it can also be very, very painful. So therefore, even if you have got the 80IAC registration, please be careful that MAT liabilities will still arise. Keep your calculations ready. Deposit the advance taxes as per the timelines and as per the estimates which you have, so as to avoid 234B and 234C liabilities. Then another important aspect which has to be considered very carefully, that the new regimes of taxation, which is 115B, BAB or BAC, wherein you have claimed the tax rate, you have lowered down the tax rate to 22%, and the effective tax rate with surcharge and cess is 25.17%. If you have opted for that new regime of taxation, you go out of the 80IAC exemption. You will not be eligible for 80IAC exemption, because what this particular new regime says is that the rate of lower tax will be available only after you have given up all the deductions under Chapter 6A, apart from the deduction under Section 80JJAA. So 80 IAC also gets covered under the chapter 6. So therefore, if you have already availed that benefit, availed that new regime, and you have filed that form 10 IC or whatever is that, if you have filed that form, be careful that 80 IAC, even if you get the 80 IAC registration and approval from interministerial board, you are not going to be eligible for 80 IAC benefit. So your income tax form itself will not allow you to fill those clauses, right? So we have seen, because we have seen some companies coming to us, they applied for themselves, they got the registration also, they didn't pay any single penny of tax, but they had already availed the lower tax regime. And there is one more tax regime of 15% tax rate for the manufacturing entities. So many entities which have claimed that lower tax rate of 15%, they are also not eligible for 80 IAC benefit. So one company came to me last year, that was a company, manufacturing company, they had all themselves obtained the 80 IAC registration, and then they said that the income tax return form is not allowing me the deduction under 80 IAC. Why it is happening so? So when we looked at the form of the last year, they are already gone for that lower tax rate of 15%. So in those circumstances, 80 IAC will not be available. So that company had to pay the entire taxes along with the interest, right? So therefore, this is very important criteria which has to be kept in mind, that all whenever we are going for 80 IAC registration, please be careful that if the company wants to go for this, don't go for the lower tax regime, the new tax regime. Don't apply for that. Even though it makes, even if you have to pay MAT taxes, you have to do a cost benefit analysis. What you need to do now from a tax outflow standpoint, MAT is anyways going to be paid. There is tax outflow which is going to happen. Now you need to make a cost benefit analysis whether it is making any sense for that tax credit to be availed as a MAT credit at a later point of time, and whenever it is availed, whether it is going to make sense to go for the 80 IAC benefit or not. So this is what we have to do, because see what happens is that if as an advisor I'm just advising 80 IAC benefit, and at a later point of time the business entrepreneur has to give 15% MAT, they will be after our life that you were saying that it is 100% tax holiday, but ultimately I have to pay tax. So they don't bother that it is something which is going to be allowed as MAT credit at a later point of time, which is going to start from 4th year onwards, right? So all these things need to be explained to the clients beforehand, so that they are much more aware and they are taking a call on the basis of full facts presented to them, right? So this is something which is very important to be kept in mind. Now moving forward, along with the 80 IAC benefit, the interministerial board approval also gives you relaxation in the point of taxation of ESOPs. And so when the ESOPs are granted, we know that TDS has to be deducted at the time of allotment of shares against the ESOPs. So when the vesting period ends and the ESOPs are exercised and shares are allotted, even though there is no cash which has been received by the employees, they'll have to pay taxes on the employer will have to deduct TDS on the basis of notional value or the fair market value of the shares minus the amount of recovery which they have done. Now what happens is that this brings a cash flow situation for the employees of the company, and now for the employees of a registered startup which is registered with the interministerial board, the second stage startup, they have given a relaxation that even though shares have been allotted, the TDS will not be required to be deducted until the date of sale of such equity shares by the employee. Means when they have already sold it, then say for example after 1 or 2 years they sell it in market, off market sales deals. At that point of time you'll have to deduct tax as employer, or date on which the employment ends. Say for example the employee leaves before selling the ESOPs, before selling the shares, and he's moving on and will remain the shareholder, but he's ending the employment with the company. At that point of time, you have to deduct TDS on ESOPs. So it may happen, say for example, the allotment of shares against ESOP happens in year 3 and the employee leaves in year 5. So in year 5, you'll have to deduct TDS. Or if nothing of these two things happens, the 48 months have expired from the date of allotment of shares. So what it says is ultimately you are going to get at least 4 years. If nothing, if you are not selling the shares, if you are not ending the employment, they say the government is recognized that we are giving you 4 years. Either you sell off the shares or you exit the company. But if 4 years are expiring from the date of the allotment of shares, the employer will have to then deduct TDS. So this is giving you a longer period of time to generate revenues or keep aside the money which is required to be paid at taxes, right? So this is also one of the benefits of interministerial board registration. Then the another benefit is capital gain tax relief. So for example, we have seen many new entrepreneurs, what they do is they actually put in the entire wealth which they have. They will sell off the property, they'll just put in entirely, they'll just commit themselves to the startup which they are running. So they say they have brought in a new section which is 54 GB, and it is also available, it is also eligible when you have got the interministerial board certificate. It says that you are an individual or an HUF, you have transferred the residential property, a house or a plot of land, you are an eligible MSME or a startup company. Now the startup company means the company which has obtained registration from IMB, Interministerial Board, and the company has purchased new plant and machinery within 1 year from the date of subscription. And you have to subscribe, you cannot invest later on, you have to be subscriber to the shareholder, the memorandum of association. If you fulfill these criteria, then the gain arising from sale of this transfer of long-term residential property, this capital gain will become exempt, just like 54F, 54, section 54. So your long-term capital gain will become exempt. Now what you have to do, your company must be incorporated within this particular financial year. So for example, if I sell my residential plot in August, so my company should at least should be incorporated after 1st of April within this financial year. So it can be prior to my sale, but not before 31st of March. So if I have incorporated the company last year, then I cannot avail the benefit. So this has to be kept in mind. The company should be engaged in business of innovation. This is the same old criteria. The investor seeking the relief must own at least 25% of the share capital or 25% of the voting rights of the company. So I should be a substantial shareholder in that particular company. And the equity shares so acquired must be held for 5 years. I cannot sell them off. Then the company must be eligible startup having certification from Interministerial Board of Certification. So this is although this is a relief which has been made available under section 54 GB, we have not seen practically much applicability because as I mentioned that only 3,600 startups are as on date registered. And out of these also, these kind of conditions make it little bit difficult for new entrepreneurs to claim the benefit against the transfer of capital asset, which is residential property or plot of land. So it's just that, okay, this benefit is available. If somebody fits into this criteria, they can claim the tax deduction or exemption against the long-term capital gain arising from the sale of residential property. What are the conditions for the use of investment? Okay, there are other conditions also, that the money which you have invested in the company must be used for acquiring new plant and machinery only. And that plant and machinery must be held for 5 years, and that new plant and machinery should also fulfill these criteria. It should not be used earlier, it should not be an old machinery. Vehicles are not eligible. It should not include office appliances or computer software unless you are a computer company, you are a technology driven company. Then it should not be installed in any office premises or residential accommodation, including accommodation in the nature of guest house, and the whole of the cost of plant and machinery must not be claimed as reduction by way of depreciation or otherwise. Say, for example, earlier the renewable energy equipment was allowed a deduction, depreciation of 100% in the first year itself. So this provision is an old provision. So nowadays, no plant and machinery is eligible for 100% depreciation in the first year itself. Therefore, ultimately, this provision is almost redundant now. But see what kind of conditions have been put across. So, as on date, in my experience, I have not seen anybody fulfilling these conditions. But yes, if someone can fulfill these conditions, then obviously we can get the claim of tax deduction, tax exemption against the long-term capital gains arising from sale of residential property. Now, there are certain other relaxation in the carry forward or set off of losses. Again, this relaxation is also a derivative of interministerial board approval. This does not come to you only from the first stage registration. So, as we are aware that if there are losses, and generally the startup companies are incurring losses, if at a later point of time the shareholding has changed more than 51%, then your earlier year losses will not be allowed for a set off against the future year profits, right? We are all aware section 79 is that section. Now it says that they have provided a relaxation that if you are an eligible startup means registered with interministerial board, and the shares which were held by the shareholders on the last date of the financial year in which the losses were incurred are also held, or as it is held, means not even a single share should be sold off by them, are also held in the year in which these losses are claimed to be set off. Then even though the shareholding of those shareholders may have come down below 51%, because if you have raised capital, you would have issued share capital to some other shareholders, right? In that process, the shareholding of the existing shareholders may get diluted in overall percentage terms. But if the original shareholders are holding the shares which were there with them initially till the date in which, till the year in which the set off is being claimed, the condition of 51% will not apply, right? So now what we say is that these are partially exempted. Why I'm saying partially exempted? But that the raising of capital has to happen through fresh share capital only, raising fresh issuance of fresh shares. It cannot be through transfer of shares. So if you transfer the shares, the relaxation is gone, right? So if you want to avail this benefit of relaxation, these are the conditions which are there, and the benefit is available for first 10 years of incorporation. So what is the time period of your startup as recognized as startup? That is also the time period which is there. Till I think last year this period was 7 years. In the last year's budget, last year I think, I don't remember whether it was 23 or 24, it was changed from 7 years to 10 years, right? So this has been aligned with the definition of startup under the Startup India program. Okay, then I'll just briefly mention the eased conditions of angel taxation, because ultimately now this budget has second Finance Act number 2 of 2024. This has withdrawn the provision. They have mentioned that angel tax provision or the provisions of section 5627B shall not apply from assessment year 25-26, which means that effectively it is not applicable from 1st of April 2024. So any fresh capital you have raised after 1st of April 2024, at whatever price you raise it, it's not going to be taxed under section 5627B. However, previous year are still open. Many a times we have seen that capital was raised in previous year, and if you have obtained the startup registration now, this is my opinion that you can still go for filing this declaration under angel taxation, because this generally what happens is that the when the registration is granted, it is granted from day one, and once you file the declaration, it is also applicable from day one of your incorporation. Obviously, there are certain conditions you'll have to meet. but this may be useful for certain more years because there are older cases which are still alive. So what are the conditions? When a company issues shares to an investor, it has to bring in capital at fair market value. If the fair market value can be determined through discounted cash flow, if the share capital is received in excess of fair market value, right? So that excess amount was considered as income in the hands of the company, and that income was taxable as other income at the normal tax rate. Now, this was generally called angel taxation, which I just mentioned has been withdrawn from assessment year 25-26. Now, what was the requirement? The startup registration must be obtained from DPIIT, the first stage registration only. You have to file Form 2 with DPIIT. Aggregate turnover, aggregate paid up share capital should not be more than 25 crore rupees, and it included share premium, except from share capital received from non-residents, from venture capital funds, AIFs, and specified companies, right? So this exemption notification mentions non-residents also. So even though in 2023, section 5627B was amended to say that even if you are receiving share capital from non-residents, 5627B will apply. But now the exemption mentioned that non-resident capital is not included in the threshold of 25 crores. Then specified companies, if you are raising capital from specified companies, specified company means specified company is a frequently traded company on stock exchanges and whose net worth on the last day of preceding financial year exceeds 100 crore rupees, or turnover for the preceding financial year exceeds 250 crore rupees. So if these conditions are met and you are raising capital from such a company, then the capital raised from such a company is also not to be included in the threshold of 25 crore rupees, right? Now the turnover has to be below 100 crore rupees, which is very, very common. Once you have fulfilled all those conditions, you have to declare that you will not invest the money raised in immovable properties, loans or advances, capital contribution, shares and securities of any other company. Now, securities was a very wide term. As per Securities Contract Regulation Act, securities also include mutual funds. So what happens is that the funds which are raised, they are not deployed for business activities immediately. So many a times what used to happen is that the funds were parked in mutual funds, even though debt mutual fund. The mutual fund is covered under the definition of securities. So what unintendingly there was a violation of this particular condition. Well, now the provision is gone, but whenever you are defending the positions in past assessments, probably you'll have to be careful that a query may come that why it should not be considered when the investment is made into mutual fund, why your exemption should not be withdrawn. Then you could not have invested in motor vehicles exceeding 10 lakh rupees. We have seen whenever a high fund is raised, the founders, the founder directors generally do get vehicles for themselves. So if the company is purchasing vehicle of more than 10 lakh rupees, then the exemption will go away. You cannot invest in jewelry or bullion, archaeological collections, drawing, painting or sculptures or any work of art. These restrictions, wherever I have put in star, it was mentioned in the notification that if these things are purchased for as an inventory, means you are into business of immovable property, you are in business NBFC, you are an NBFC, you give loans and advances as a regular in your regular course of business, and you are into jewelry business, then you can hold them. But you cannot be into the business of trading of shares and securities. You cannot be into the business of trading bullion. Earlier this year, I had raised this point that even I cannot be in the business of trading of archaeological collections, which was weird. And in fact, the Invest India officials were not aware that how this interpretation is coming, and actually this is something which came in from the notification, which is February 2019, because this is separately mentioned, and against this it is not mentioned that you can hold them as inventory. So now we are over that phase. The provision of angel taxation has been withdrawn. But while you are defending the past assessments, you may like to consider these aspects. So this is it from my side as of now. Julia, I would be happy to take any queries if there are any.
Yes, sir. Joy ma'am, please ask some queries. Sir.
Okay. Yeah, we do have few questions. Number one, we have, can you explain more on the importance of innovation for startup registration? Is novelty factor a must for getting the startup registration?
No, as I mentioned that now innovation or novelty is not important, is not mandatory requirement. So you can go for, say, for example, uniqueness, some uniqueness you need to mention, and what is the uniqueness of your business. As I'm saying that novelty may not be required, but even without being novel, even without doing anything new, there can be some uniqueness in your business process. There must be some unique way in which you are driving your business.
Okay.
Right? And if there is none, probably still you can mention that there is nothing unique in my business, but what I am doing is I am creating high scale employment, or I am creating wealth creation. I'm doing wealth creation. So even if you are doing any of these two things, uh, the uniqueness or the novelty in business is not required, is not mandatorily required.
Okay.
Right?
Next question is partnership firm eligible to second stage registration?
No, partnership firm is not. Partnership firm is not eligible for second stage registration.
Okay. After 7 years, can the company opt out of lower tax rate regime and start claiming deduction for next 3 years? As you have said, if any of the firm is taking lower rate of benefit, then if a firm is taking that for first 7 years, and then for the
No, so there is no provision for opting out of the lower tax regime. I think the question is about lower tax regime. If the company has already opted for the lower tax regime, which is the 22% tax rate, so then can they opt out of that? To my mind, there is no going back from that new regime. You cannot come back to the old regime.
Okay.
Right? So it is allowed for individuals that you can go for the old regime, you can come into the new regime, right? Even for business persons, even individuals who are into business or profession, they can choose the old regime, but they still have one option to come back to the new regime, right? However, this is not the case for the companies. Cannot come back to the old regime. Once you have opted for that 115 BA B or 115 BA C option, then you are there forever. And once you are there, ATIAC is not available.
Okay. So, what are the chances of getting the certificate of eligibility after getting the certificate of recognition?
So this depends upon the facts of the business.
Okay.
Right? So what conditions are there, and whether the facts of the business is fulfilling those conditions or not. So for example, as I mentioned, that you have to find out whether there is any scope of high scale employment generation, whether there is a scope of wealth creation, or there is any uniqueness in the business or not. All these things needs to be evaluated, and sometimes it's a story telling, because ultimately you have to present your story. If you can present your business in a way which satisfies the conditions or which satisfies the requirement of interministerial board, you can definitely get the exemption.
Okay.
And when we are discussing with the authorities, they say that actually this is the best time to test the waters, right? Because within past 1.5 years, I would say almost 2,500 new startups have been registered under ATIAC regime. So they are also very receptive of the new applications. They are critically examining it, obviously, but they are pushing for it also, because they want that more and more startups should come forward and avail this registration, ATIAC. But this is something which is there. if you would listen into the budget speeches of finance minister, in past many budgets, she has mentioned that we are giving 100% tax exemption to income to startups, right? However, on ground, the number doesn't portray that picture. So someone can ask them questions, right? So that's why this is very good time to apply for ATIAC registration and to test the waters.
Okay, sir. Next question is, can you please explain what if company has invested in securities and has DPIIT registration?
Mhm.
Will the registration become invalid or company cannot claim deduction under 80 IAC?
No. So these conditions are only for claiming exemption from the angel taxation, the section 5627B. This condition is not applicable on 80 IAC. Are you getting me? These conditions which I am mentioning, this is the form 2 which used to be filed with DPIIT. This is for claiming exemption from angel taxation. So when you are raising funds, you are issuing fresh share capital and you are receiving share premium. So there was an overhang or a risk that income tax authority will come and at a later point of time argue that your valuation was lower, you are running into losses, how can your valuation be into running into crores, right? And how can you issue shares at such high premium? So I will tax that premium into your hands under section 5627B. This form was to claim the exemption from that provision of law by saying that we'll not even look at the exemption. I am free to raise fund at whatever price I like. Right? Now, if I am violating any of these conditions, that exemption from angel tax goes away, not the ATIAC.
Okay.
Right?
And you have used a terminology pitch deck. What is that, sir?
Pitch deck is a presentation, just like this presentation. And we call it pitch deck. Pitch deck means you're pitching for your business. In startup terminology, pitch deck is something which you use. A pitch deck. Deck means PPT. Pitch means you're pitching for your business.
The whole presentation, what we are presenting to the government.
It is a PPT basically, and PPT has to be uploaded on the website. It can be converted into a PDF format and then uploaded. So pitch deck, whenever you are raising funds, your investor will also ask for a pitch deck. Whenever you are going for new business, they will also ask for a pitch deck. So pitch deck is basically whenever you are pitching for your business in any way, either you're pitching to your clients, either you're pitching to your investors, or you're pitching to your regulatory authorities. So how we are summarizing our business into a slide deck, that is generally called a pitch deck.
Do we have any relaxation or any support for the banks to become a startup?
Not to become a startup, but after becoming a startup, there are certain schemes which is one is seed fund, India's seed fund scheme, which is a 950 crore fund of Indian government, for which you need to enroll with an incubator. So there are eligible incubators which are provided on the website of the list is provided on the website of startupindia.gov.in. You'll find out the eligible incubators. You can enroll with at least I think 3 or 5 of them, and through them you have to go for that seed fund scheme. That is a very good scheme. You can get either 20 lakh rupees of investment. Grant is also there, that if your business is found to be eligible, they can give you a grant. They can give you up to 50 lakh rupees of loan, which is returnable in easy terms, and they can also invest in your company if you are considered as eligible. However, the condition is that you should not be more than 2 years old, because that is seed fund. So that is for very initial stage startups. That is one scheme. Then there is fund of fund scheme from startup, the Small Industrial Development Bank of India, SIDB. You can apply to SIDB, but again, that SIDB is the fund manager. The top level fund manager, but ultimately the disbursement happens through alternate investment funds. So there are almost 85 to 90 alternate investment funds. They are private alternate investment funds, but recognized by SIDBI. The list of all these alternate investment fund is available on SIDBI website. If you would search for fund of funds scheme SIDBI, that will take you to a page on the website of SIDBI, and there is a list of the entire AIFs. You can approach those AIFs. There is a process as to how it happens. AIF will screen you, they will assess your business model, they will assess your potential. Once they are okay with your business model, they will present it to SIDBI. Then SIDBI will do their internal analysis. Then there will be some presentations which the founders will have to make to the AIF and then to SIDBI. Then there will be some terms and conditions which will be laid down. They'll have to be reviewed, agreed. And once everything happens, then there will be an executive board of SIDBI which approves the investment decision, and then finally the investment will happen. So as on date, almost 17,000 crore rupees have been invested or committed to startups. Almost 3,900 startups have been found eligible for this particular scheme. They all not the names of the startup, but these key numbers are available on the startup SIDBI website, not the Startup India. On this SIDBI website, you'll have to search for fund of fund scheme.
Okay.
So these are some of the schemes, but if you go for the regular funding from a normal banking channel, they have still their own criteria. Generally, the collaterals are being asked for. The government is looking to revamp that scheme, that because they have seen most of the banks are not willing to give you loan only on the basis of your startup registration.
Okay.
So that is something, because ultimately if it becomes NPA, the bank officials are under scanner and inquiries are put across them, and generally CBI inquiries are raised. So the bankers are not willing to give loans just because of the startup registration. So they will definitely look for collateral, even though there is corporate guarantee, this capital guarantee scheme also available from the government of India, but there are certain fees, 1 or 2% of fee which is to be paid every year on top of the interest rate which you are paying. And even in those schemes which we have seen, the bankers are not very willing to grant loans.
Okay.
Just on the basis of those schemes, because ultimately if it becomes an NPA, as I'm saying, if it becomes NPA, it is the employees of the banks who are being questioned about the process which they followed, and they are not looking at that it is a startup or it is a capital guarantee scheme. Even though it is a capital guarantee scheme, so the bankers, we have seen that they are hesitant.
Okay.
Right?
The only way we have is to have the collateral for the loan.
Yes.
Only
Generally.
Next and the last question we do have is, if the shares are not listed at premium, can we invest in motor vehicle?
So if you don't want exemption, then you can definitely.
This is only belongs to the angel taxation.
It only belongs to angel taxation. All these conditions which I mentioned here is about the DPIIT notification GSR 1227, which only deals about the angel taxation exemption. Nothing to do with ATIAC. It is not a condition of ATIAC.
Okay. So these were the only questions were there. Thank you so much, sir.
Thank you so much. If participants want to connect with me, they can just scan this. My contact number and profile will come to them and they can connect with me.
Yes, so sir. Many participant needs your PPT and recording.
I'll share the PPT with you.
Thank you, sir, for giving a wonderful session.
Thank you so much.
Thank you.
Thank you, everyone, for coordination.
Thank you.
And please give a vote of thanks to the speaker.
Yes. As we have come to end the session, on behalf of the committee, I would like to extend my heartfelt gratitude to Mr. CA Anshulji for the enlightening session on unlocking income tax exemption under Section 80 IAC. Your thorough explanation of the registration process and key considerations has surely provided participants with the knowledge And I would also like to thank to all the participants for making this session a great success. We are looking for you all in the future sessions also. Thank you so much, everyone.
Thank you.
Thank you.
Thank you, Mahinder, for giving us technical support.